Are we in a trade war? And does a trade war become ugly to a point where we risk putting the world economy in a recession, or are there many, many steps to reach that point?
Yes, I don't think we should overplay the situation yet, but we are increasingly inching towards that worst-case scenario. So I think if we scroll back to the beginning of the year, we were looking at that time as continuing to have a synchronized global recovery. Things looked relatively calm in terms of the underlying outlook. Clearly, those headwinds have started to build as we've gone through the first half of the year, and they're now starting to really extend as we go into the second half, because, of course, the trade measures, the trade frictions are seemingly only on the rise. So we're talking not only about the US and China, we're now talking about obviously the risks to the European Union. So if we are going to see those trade tariffs increase in momentum and impact, then, of course, the global economy is going to be impacted on a progressively stronger basis. We're not at recession risk yet, but I think we're starting to flash amber in terms of the risk parameters.
OK, are we at amber, or are we at, like, light red?
No, we're in amber at the moment, and certainly when you look at the direct impact that all the trade tensions have had on growth this year, actually it's pretty muted. A very forward-looking indicator is look at things like manufacturing PMIs, though. That's where it's flashing amber and just suggesting going forward a little bit of softness.
Nicholas, happy July. We're coming up on 4th of July, fireworks in Boston and all the rest here at Bloomberg. Nicholas, when are you going to blink, and when are the central bankers going to blink on low interest rates? You just said we may see some form of sluggishness or slowdown. How close are we to where the central banks blink?
Oh, we're a long way from that. And again, when you take a step back, you look at what's going on in the US, you've got a payrolls release this week that's likely to show stronger wage inflation. You've got the impact of tax cuts and the deficit coming through. So there's a growth rate of 4, if not 5% right now. That keeps the Fed on course for a minimum of 2 hikes this year.
Jeremy, what level of euro gets your attention? If we get stronger euro, is there a point where stronger is stronger?
Certainly the ECB are very mindful of the impact of the euro and the headwinds that would bring forth into the Eurozone recovery. I think if we were to see the euro appreciate significantly, and of course that would imply that the growth trajectory or the market is perhaps reconsidering the ECB, I think if we would see the euro appreciate beyond the sort of the 118, 119 level in the short term, that would cause a risk. And in the same context, I think the ECB would be increasingly uncertain if we were to see that 115 threshold give way.